Hello everyone. We hope you've had a wonderful summer. Here we are into the fall already, can you believe it? The leaves are changing, and while the rains haven't come in full force yet, we know they will here in the Pacific Northwest. Our get-togethers this time of year provide us with an opportunity to pause and reflect on how we've gotten here. And then we can set our sights on things that we can control to help close out the year well. Today we'll talk to you about where we've been, where we are, and where we think we're going, and then we'll leave you with a few suggestions on things to consider before the end of the year. So let's talk about how we've gotten to this point. We're still facing many of the issues we talked about 3 months ago: inflation, interest rates, the war in Ukraine, and supply chain disruptions. These issues are pulling the market lower, which is, as we know, never fun in the moment. Now, on the plus side, we are beginning to see some signs that inflation could slow in the coming months. Consumers and businesses are beginning to pull the reins on spending, and home building and buying are slowing. And so higher interest rates are having their intended effect for now, as demand is slowing, but jobs remain in solid shape. As we've discussed before, though, higher interest rates usually lead to lower asset prices. Stocks, bonds, real estate, and other categories are down as a result. And so markets are volatile and the future uncertain, but that's nothing new, and we've seen this before. As investors, we worry whether the market is rising or the market is falling. It's easy to look back at the strong markets in 2021 or late 2020, for example, and forget how scary those felt at the time. Now, where's the silver lining in the current environment? The Federal Reserve is attacking inflation aggressively, and as I said before, we are beginning to see signs that inflation has at least stopped accelerating and could slow, which means we may be closer to getting some relief on interest rate hikes after the next few Fed meetings. And that would be a positive for asset prices. What hasn't changed, and what won't change, is our focus on the long term. We'll keep looking for and finding opportunities in this volatile environment. Now let's hear from Andy Murray about what we're focused on going forward.
The word I would use to describe this moment is paradox. On the one hand, the economy is slowing as interest rates rise. On the other hand, it's a great time to have a job or to be looking for one. Here at Becker, we remain optimistic but realistic. Yes, the economic picture is challenging, but some of the headwinds could become tailwinds over the next year. For example, inflation and interest rates may well peak and fall in the coming quarters, as we've seen already with commodity prices. And there are some opportunities that have become uncovered by recent moves in the markets. Two items in particular stand out. One is interest rates. As we look ahead, and for the first time in almost a decade, you can earn meaningful returns on your cash and bonds, which is remarkable given where we've come from and how quickly this has happened. Two, lower valuations today can mean higher returns in the future. It goes back to Warren Buffett's famous adage that when it comes to investing, you should be greedy when others are fearful and fearful when others are greedy. The basic tenets of investing still hold true. Invest for the long term, diversify, and use your head, not your heart. Keeping your cool allows you to stick to a disciplined strategy. In the meantime, our next speaker, Bree Pangaris, will talk to you about actions you can take now as you head into the year end.
Thanks for that introduction, Andy. At Becker, the wealth planning team likes to think big picture. We're focused on helping you achieve your long-term goals. That's especially important now as we head into the end of the year. There are plenty of actions to consider, but let's focus on 3 strategies today: cash management, tax planning, and charitable giving. Number 1 is cash management. If you have extra cash in accounts, either with us or with your bank, let's talk. We can explore low-risk options such as T-bills or high-yield savings accounts. You could easily generate a higher return, even if you're feeling risk-averse. Your second year-end consideration is tax planning. We all have to pay taxes, but maybe there's an optimal way to do it. A common strategy for our clients who are in retirement or nearing it is the Roth conversion, which can shift a future tax liability into years with lower tax rates. Just a little forethought can pay dividends in tax efficiency. Third is charitable giving and estate planning. Many of you want to leave a gift to your families and donate to your favorite nonprofits. This is one of those items that, with a little planning, we can help you achieve in the most meaningful way. If you're interested in any of these strategies, or if you have other questions about your financial plan, please reach out to the planning team. We're here for you.
Those are some great tips, Bree. I think you'll agree that this has been an unusual year, to say the least. But we've been through tough periods before. Andy said it well when he emphasized maintaining long-term view and portfolio diversification. Now, on behalf of everyone here at Becker Capital, thank you for watching, and thank you for your trust. It's what allows us to serve you each day. As always, if you have any questions or concerns, don't hesitate to reach out to us. And as we prepare for the upcoming holiday season, we certainly wish you and your family the very best.